Hello, everyone. This is Harsh Madhusudan. This is my new podcast on YouTube. It's a new channel called Long India. If you can see the video, please comment so that I know it's live. But I think it's my first video. I'm going live. It will also be there on YouTube recorded. Um, I think what we're going to discuss today, I'll do recorded videos, I'll do live videos, I'll do monologues like this one, I'll do discussions. I want to discuss a slightly provocative topic today called Can India be the world's largest economy by 2047? And I'm deliberately using that as a peg, as a reach peg, to think how to think of these issues. As in, I have a view that by 2025 fiscal year, we'll be able to reach 5 trillion, which is not the conventional view. I also think that by around 2030, 31, we'll be able to reach $12 trillion economy. That is also not a conventional view. So by 2047, can we overtake effectively the Chinese and American economy, because the other economies will overtake in this decade itself? And how do we think about that? So I think the three big reasons to think of India's growth, or any growth really, is I'll divide them into three buckets. One is demographics, right? The number of people who are there, how many of them work, what kind of quality of human capital and skills they have. The rest of the part is how much production per person, right? Therefore, the other two parts can be, one is governance, right? What kind of state capacity you have, what kind of infrastructure you develop, what kind of regulation, state capacity in terms of judicial, administrative, etc. you have. And I think the final aspect could be technology, which is both exogenous and endogenous, in the sense it is relevant to India. India takes technology from the world, but increasingly also produces technology for the world. So generally, as soon as there is more technology, the same person can produce more stuff. So to think of India's growth, there are three parts: demographics, governance, and technology. Governance and technology can together be considered as productivity, and demographics can be considered as the number of people who will work. So let's look at demographics first, and then we'll come back to the provocative question whether we can be the world's largest economy. What does that even mean? For example, we have a $3 trillion economy right now. The Chinese economy is around 5 times larger, slightly more. The US economy is 7 times larger, slightly more. But the Chinese economy was roughly our size around 30 years ago. So if in 30 years the gap can go to 5 times, then in the next 30 odd years it can also reduce. Just mathematically, whatever the difference percentage wise was on every year for the last 30 years on average, it can obviously theoretically also reduce. And I think most probably by 30 years, if you're talking about 2047, if it happens, the last economy that we will end up overlapping will be the Chinese economy and not the US economy, though that will be close. Because the US has much fewer people. India has right now 1.4 billion people almost. China has more than 1.4 billion slightly. And the US has 330 million people, 1/3 of a billion. So I think the overall theme that I will have in all these videos will be what you can call economic convergence. That is, the last 300 years have been a bit of an exception, where the per person income or wealth has been dramatically different across countries and continents, whereas till about 1500, 1600, 1700, they were roughly the same. There was differences, but because they were roughly the same, the size of a given economy was roughly proportional to the size of its population. So the last 300 years were actually a bit of an exception, or last 200 years rather, and some people call it the Great Divergence. And there's a lot of debate about that. So in a way, India is a special case of a larger trend or a larger thesis called the Greater Convergence. And is that true? To what extent is it true? Is India therefore part of the partial extent to which it is true? And is India the best example of that right now? Okay, so let me try to share the screen so that I can. So I also have a Substack called longindia.substack.com. I've obviously written many articles. Some of you may know I've written a couple of books. I'm quite active on Twitter. But this channel will be primarily about economics, investing, financial literacy, but not about investment advice. This is more of the macro picture. For advice, you should please consider a registered investment advisor. Okay, so let's share the screen and go to demographics. Okay, I think. Okay, so this is the article I had written on my Substack last year on India's demographic sweet spot. And before I open that, let me just simply show you what is known as a population pyramid. So all countries have what is known as a population pyramid. And okay, so if you see this one, this shows the percentage of boys and men and girls and women across age. So that we're going from 0 to 100 in gaps of 0 to 5, 5 to 10, 10 to 15, and so on and so forth. The one in blue are boys or men. The one in pink or red is girls or women. And we can see that India's population is very bottom heavy, right? The biggest, what is known as cohort or 5-year cohort, is actually in the 15 to 20-year gap. So this is for 2020. If you want, we can change it to 2021. It doesn't rapidly change in 1 year. But you can see that the broadest cohorts are actually in the 10 to 20 age group right now, or roughly teenagers. So if you just do simple math, 10 years later on, those who are in their teens right now will be in their 20s. And if we think that 25 is roughly when the average person starts working, actually it's much younger, but many girls and then women actually end up getting married still relatively early in our country. Then they have the first child, the first 2 children, then they rejoin the workforce. And more people are also studying for higher education, men and women both. So if you take roughly 25 as a cutoff, you can see actually India's peak demographic boom will actually be in 10 years, around 2030, because the widest cohort what is right now in the 10 to 20 group will then be in the 20 to 30 group. So that's roughly, say, 25 on average. Now, of course, as they grow older, that cohort will rise through. In 2040, they will be in the 30s, 2050, they will be in the 40s. So they'll have more experience. More of them might rejoin the workforce after starting a family. They'll be simply better at their human capital. So in terms of quantity, we will probably peak in 2030. But in terms of quantity and quality, we still have even more time to peak. So I think that's roughly how you think of population pyramid, because the way we are very bottom heavy, most developed countries are either medium heavy or actually top heavy. And their bottoms are actually very narrow in that sense, and in a population pyramid. So let's look at this graph. This graph, which you can see on your screen right now, basically shows you what is known as the percentage of population which is between 25 and 65. So that means of the entire population, how much of the population is of a working age, right? Because anybody below the age of 25 and anybody above the age of 65 can be considered to be quote unquote dependent. And you can see that in the case of India, it kind of bought our dependency ratio, or sorry, the number of working people compared to the overall population was the least in the 1970s. And by the way, this is the same time frame for China. We'll come there in a second. And it peaks around 2030s and 40s, as we were discussing. So our working age population as a percentage of the overall population was the worst in the 1970s, mostly because there were a lot of children then. And it will be around the best around 2030, 40. And after that, when this number declines, that's mostly because of older people. So this whole thing is known as a demographic transition. And if you see for the Chinese, they also kind of bottomed out in the 1970s, but they've already peaked out around 2013, 14, 15. So once again, in India, it's peaking out in another 15 years. In China, it's already peaked out 5 years ago. So that in sum is the biggest reason. There are, of course, many other reasons. We'll come to it. Why there is a big divergence in likely growth. Just to show you what this means, if you can see this graph, India's 25 to 65 population will go from around 670 million to more than 900 million in 25 years. And China's will come from around 820 million to around 720 million in the same 25 years, which means if you take the difference of differences, India's relevant age group increases by 250 million and China's falls by 100 million. And therefore, the difference of differences is 350 million, which is actually more than America's population, 1/3 of a billion. So that is the delta that we will see between China and India in terms of working age population. So I'll just go back to see if there are more comments. Yes, I know this looks a bit weird here. So let's go back to this graph now. Let's skip this one for a moment. I'll come back to it later on. So it's not just the quantity of people, but it is also the quality of people. So what I mean by that is, if you look at this graph, this from the National Sample Survey, this is an ORF think tank graph. This shows you the literacy, right? So it's all good to have a lot of people, but if they're not literate, if they're not functional, how do you make them do economic productive activities beyond a point? So we can see that actually for the younger population, we are already close to 100% literacy from 6 to 25. And in fact, 6 to 14, there seems to be no difference between male and female literacy. And for 15 to 24 also, it's almost fully gone. It's only there in, above the age of 25, so 25 to 65 and older. So this shows that actually all of these people, they might be underprivileged in various ways, but they're all functionally literate. Now, I understand literacy does not mean great educational quality. We'll try to come to that in a moment. But imagine all of these people also already have a phone. Let's say half have a smartphone, half have a kind of a normal phone that we used to have earlier. Maybe in the next 3-4 years, all of them will have a smartphone. So all of them will be digital natives, will be comfortable with technology, and will be literate in English, Hindi, or some other language. So they can actually plug and play in basic entry-level jobs, which actually was not the case even a few decades ago. And this is now across both genders. So I think that shows the difference in the quality of the human capital that's coming in. But of course, literacy is not enough. This is the enrollment in higher education. You can see that actually India was ahead of China till mid-90s, and then the Chinese have simply shot up, like around half of the relevant cohort is enrolled in higher education in China, whereas in India it's at most about a third. In fact, more like a fourth. But this is 2016 numbers. So I'm guessing it's closer to 30% right now. And of course, there's big damage from COVID in terms of, if those who could not access digital learning, there is a clear divide there. Although in the long term, our schools and colleges might be forced to be more technology savvy because of this problem. Although in the short term, that is not good enough for those who have missed out the last 1.5 years. So like that's basic human capital. On health and sanitation, you can see that in the last 7 years, we've basically gone completely from 1/3 or 40% to 100% coverage for sanitation. Similar numbers you can see on electricity, where it has now reached every village, but not reached every house yet, although we're getting close there. And right now the work is going on having drinkable, potable water in every house in the next 4-5 years. So if I close this and go back and stop this screen, okay. So I hope that was useful in terms of demographics. Please feel free to keep on writing your comments. I'm reading that here. It makes it easier to respond. I'm doing it for the first time. So in demographics, you can see that literally all other parts of the world, Europe, China, Japan, and even the United States. The United States probably has the healthiest demographics of all the large economies. But even the United States, nobody comes remotely close to India's net addition in absolute numbers for people in the working age population. So what I mean by that is, obviously, India's percentage population growth rate would be very similar to the US over the next 30 years. But if you look at the working age population, we will be much higher than even the US. So that's on demographics, and we'll come to. I'll do deep dives on each one of these factors later on, and I'll try to call guests and discuss with them. But today, I just want to give an overview. So demographics is one factor. I think the other two factors we can discuss also briefly right now. I don't have necessarily graphs for them; they're more qualitative factors. The second factor was governance. I think this is extremely important to understand why we are bullish on India, why I am bullish on India, because ultimately, to understand what is economic growth, we have to understand how economic growth has happened in other parts of the world, right? I mean, everybody was effectively poor till about 300, 400 years ago. And while, of course, economics and public policy has to be localized, has to be customized for specific conditions of various countries and various times, actually, if you read economic history, there comes out to be somewhat of a similar toolkit of how different countries became rich. And you can study Prasannan Parthasarthi, who's written this book, Why Europe Grew Rich and Asia Did Not. You can study, I'm forgetting the name of this economic historian, Robert Allen. Yes, you can study Bob Allen, who's also has a similar but slightly different view on economic history. And if I summarize these two and other intellectuals, and I'm not trying to say there's a complete consensus, there are a few things you need for growth. One, you need a functional state. When you need a functional state, what does it mean? It means a state that will, I'm not saying there will be zero corruption, but that will be less corrupt and more focused on honestly using taxes. At least some of them will go to productive infrastructure and so on. First thing you need is a state, because a state, without a state, there is no way to have control on violence. And if we don't have control on violence, then basically nobody with a long-term vision will invest in a factory, or in fact even a farm. Anything that is static in production, once you've made the investment, it is very difficult to recoup that investment if you are afraid of violence, which is basically what happened to India over the centuries, right? Over the last 1,000 years. So first thing you need is a free state. Okay. The second thing you need is, as much as possible, yes, state with a capital S. When I state, I don't mean provinces. I mean state as in the Indian nation state, the Indian civilizational state. The second thing you need is, as much as possible, a large domestic market. So what I mean by that is, while globalization and free trade are important, they are not ideologically necessarily must have 100% all the time. First thing you need is domestic free markets. What I mean by that is, how does growth happen? Growth simply means the more stuff you produce, that is the more stuff you consume. And how do you produce more stuff in a classic Adam Smithian sense? You produce more stuff when there is more division of labor. Division of labor means what? It means specialization. So that means, if you used to go to villages in UP and Bihar or Rajasthan 20 years ago, you would find them sewing their own clothes, making their own snacks. In fact, my own nani I have witnessed till around 20 years ago cooking their own papads, on the chats of their houses, right? And which is fine. If you want to do it out of love or passion, you can do it even today. But if you read somebody like Nilkant Mishra, his reports on Credit Suisse, people used to produce a lot of stuff they used to consume on their own because they were not connected to the larger market. And therefore, the specialization was less. And when there is specialization is less, productivity is low, because obviously you cannot do 10, 20 different things supremely efficiently. You can only do one or two things more and more efficiently with time. Now, what determines specialization? So the classic Adam Smith answer is, the extent of the market determines the extent of specialization. What does it mean, the extent of the market? Extent of the market means that, assume you lived in an Indian village 20 years ago and there were no pakka roads. So it's not possible for somebody to come and sell cheap t-shirts or shirts, right? Because what today takes maybe 20 minutes, it could have been about 2 hours earlier. So there is a cost of time. So you have to be connected to the domestic and later the global markets. And what has happened for the poorest Indians today in the last 10, 20 years is they have finally been connected to the global and the domestic market. So they have pakka roads, which need to improve, but they're at least there now. As I was talking about, there's water, electricity, sanitation. Now there's the internet, right? Increasingly in tier 4 towns, tier 3 towns, and large villages in India are effectively tier 3, tier 4 towns, because India's official numbers on urbanization are actually understated. You can actually order something from Amazon and Flipkart and get it. Maybe it will take one more day compared to metros, but you can get it. And that shows that suddenly somebody can focus on building good shirts in one part of the country and just sell throughout the country, as opposed to thousands of different families sewing their own shirts. And because that one person does it in one part of the country on scale, with technology, with specialization, because the extent of the market has become larger now, and he might also export it, that is why productivity increases, the quality increases, and the cost or the price of the shirt falls. That is the sum and substance of how economic growth happens. So I think that is something which a good state does. So what are the factors? I'll just lay out the factors first and then go into details. First is you need a free state. Secondly, you need as large a domestic market as possible. Third, you need exports to get even more specialization and scale. But it depends. But how much you allow imports is a political question, and I'll come to that. So generally, free trade helps, but there is a nuance there. Then what you need is a literate population. You need functional, healthy, skilled population. We are not there compared. We are not quite yet there compared to China or definitely the richer countries, but we have significantly improved. Fourth, you need is a good financial system. So a state, then a domestic market with some exports, which we can come to. Third, some good human capital. Fourth, you need a good financial intermediation. So you need banks, you need capital markets, you need ways to, so that if you and I are saving money and putting in an SIP for Indian stocks, somebody can go and list a company and raise that money in an IPO or in a repeated public offer, or in general, their existing shares price goes up and therefore they are richer, and they use that kind of wealth to buy other companies, to buy factories, to create new investment, right? So basically, you need a state, you need larger market as much as possible, you need human capital, you need a financial system, and the last thing which kind of connects back to the size of the market is you need infrastructure. If you have more infrastructure, you have the national market within is more domestically connected. So let's come back to this market point. So see, for example, Singapore or Hong Kong has to rely on free trade, and a country somewhere in the middle like Vietnam or Bangladesh has a domestic market as well, but it also has to rely on exports. In cases of India or China or European Union as a whole, or United States, you get closer and closer to having a large domestic market. And in that case, you can use some industrial or trade policy to incentivize investment. So what I mean by that is, we tried this under Nehru and then Indira Gandhi, but we made some very key mistakes. And unfortunately, the entire strategy has now been kind of stamped as license Raj. But actually, some protectionism makes sense, in the sense that you can say, you can be a South Korean company called Samsung, you can be a Japanese company called Maruti Suzuki. You will be treated equal to Indian companies, but so long as you manufacture in India. If you do not manufacture in India, you might have to pay moderate tariff of 10-15%, and you might forego moderate subsidies of 3-4%. So that nudge, because anyways they're looking at such a large market, and if you do not do that extra nudge, then they'll say, well, we already have factories in Vietnam or Bangladesh or South Korea or Japan or China, especially China, because we also have geopolitical issues with China. We don't necessarily want to create a factory in India. So that is something that actually we did not use in the last 20 years until Modi came, because we were so afraid of being labeled as license Raj, because this experiment had failed earlier in the 60s and 70s in a different form. What we did in the 70s was, we said, if you're a Coca-Cola, you're out of India. We treated foreign companies badly. We did not make the nuance that a foreign company is the same as an Indian company so long as it manufactures in India. So Make in India does not mean, or Atmanirbhar Bharat does not mean that Indian companies are getting protection. It simply means that so long as you manufacture in India, even as a foreigner, you get some benefit. And that is literally how all economies have gotten rich so far. So I'll give you an example. The UK, in during Tudor times, England used to like basically have some tariffs on importing of woolen clothes, and had some export restrictions on, because wool was one of the main goods it used to trade with mainland Europe, with continental Europe. Later on, it did that with India on cotton through calico tariffs. Germany had a when German state nation state became in 1870. It formed what is known as a Zollverein. Zollverein is basically a customs trade union. In a way, it's the precursor of today's European Union. And they said within German states and kingdoms we'll trade freely, with some trade with the Hanseatic League, but outside that, we won't, because we are a large confederation together, Germany. We don't want to allow England to export to us all its excess capacity. Same thing happened with America. In the so-called land of libertarianism and free markets, throughout the 19th century, had weighted average import tariffs of 40%, 40%. Same thing happened with Japan. Japan used its defeated position, but still important position, of containing the Soviet Union in the Far East and being an American ally from the 1950s, to export to the American market. Until in the 1980s, it became so powerful in auto exports that basically Ronald Reagan forced them to use voluntary export restraints like VERs. And in a way, the Americans did the same with the Chinese, that, okay, you become rich by exporting to us. We will not necessarily have equality or reciprocity in exporting back to you, so long as you help us in containing Soviet Russia, which happened by the early 90s. The only problem was it happened for 20 years more after the Soviet Union fell. And those 20 years was the strategic mistake of the American state. It allowed China to become a competitor, somebody who has a completely different non-democratic ideology. So something similar is happening in India right now. India is saying, we are geopolitically aligned with China, like China was with Soviet Union, but we also have ideological affiliations. We will never be kind of mortal enemies in an ideological sense, perhaps. And therefore, it might be interesting to see how India manages to do some mercantilism, some moderate, smart protectionism, trade and industrial policy, for the way we are doing with, these PMIs, kind of these incentives to produce. And let us see how the United States and Europe responds. But even if that does not happen, India is now a large enough market that by our own, we can incentivize Korean, Japanese, American, European companies to manufacture in India, do some technology transfer, and not just import the way we did for 10, 15 years in the middle. So that's a very important point, why having your state kind of incentivizes, not forces, but nudges people to start manufacturing in India. Ultimately, what is growth? What is prosperity? Prosperity means if you produce more stuff with less people. And when there is not enough stuff to produce for those people, the default occupation is agriculture. So when there is nothing else to do, then there is disguised or hidden unemployment in agriculture. And once that starts reducing, then countries reach what is known as a Lewis turning point, right? When agriculture population, say, becomes less than 20%. There is no hard and fast number. In India, it's probably 35, 40% right now. So China has already done that in the last 10, 20 years. So I think somebody in the comments mentioned Frederick List. That's absolutely right. So we have to follow Frederick Hayek for domestic markets, and Frederick List, please Google him, Wikipedia him, for our export strategy. I'm not saying free trade is bad. Like, it depends. It depends on how dominant your domestic industry is, but it's not clear cut. So now so I think human capital, demographics ho gaya, state capacity and trade ho gaya. I think let's quickly come. I think financial part is relatively self-evident, but anyways, it can get very complicated. So let's leave it out of this video. Let's come to infrastructure, and then finally we'll end up with the last point, technology, which is the third point: demographics, governance, technology, governance. When let's discuss the last point, which is infrastructure. Why is infrastructure so important? Infrastructure is so important because if you look at India's map, for example, the most incredibly dense population is from UP, Bihar to Bengal, right? In parts of Bihar is touching almost 2,000 people per square kilometer, which is more than twice the density of Greater New York, which is America's biggest, densest metropolitan area, right? So this is supremely dense areas by any global standard. And the reason why there are so many people here, because historically this area has and still has very fertile soil, because after rainfall the water comes down from Himalayas, you bring that fresh alluvial soil, and therefore the agricultural fertility of this area is very high. What earlier used to happen when India had proto-industrialization is you would make something in Kashi and Banaras, Varanasi. It's the spiritual capital of India, also because it was at one point one of the most important commercial centers of India. You would make something, let's say some clothes, and you would just put it on the Ganga in some kind of boat, and it would reach the sea in Bay of Bengal. So the seas were the highways, sorry, the rivers were the highways before the highways. But what happened is as population increased, and during British times, we kind of cut more and more canals, the flow of the water in the rivers became less, and therefore the rivers became less navigable. And while we built some railways with Indian money under British times, we forgot to upgrade those railways during independence for the most part, at least as much as we should have, and we definitely forgot to do good expressways. But in the last 5, 7, 10 years, across parties, but I would say it's fair to say, especially under the BJP government, both central and state, there is a massive focus on expressways. So what that does, along with the dedicated freight corridor that's coming up with the trains and these new expressways, and even the waterways are now being revived, the dense population of the country will have some alternative besides agriculture, because they can once again work in factories and export to the rest of India and the rest of the world. In fact, till 30, 40 years ago, places in Bihar and places like Kanpur in UP were very large industrial centers. But actually Maharashtra, Gujarat, and all of South India went ahead because, whatever their own good policies, and that should be given credit for, but also because they were close to the sea, and therefore they were close to ports, they were close to exporting, and therefore the logistics cost was much lower. So a large part of Chinese growth was actually reducing logistics costs, which is what infrastructure does. Infrastructure is difficult to do in a divided polity, in a coalition government, or in a corrupt government, or a government which is obsessed with caste identity, because then you're always giving more and more welfare to different groups, and you don't save up money, you don't take tough political decisions, because the thing with infrastructure is whatever you invest today does not show up in benefit today. If anybody of you has seen a metro being constructed in an Indian city, actually those 3-4 years it becomes more difficult to use the roads of that city, because half of it is gone under the construction of that metro pillar or tower or what have you. So like any investment, there is a short-term pain but long-term gain, and therefore you need political stability and leadership to increase infrastructure money. So infrastructure is one of the few ways which increases short-term demand in the economy, because people get to work like they do with construction and agriculture. Blue collar work increases, but it also increases long-term supply or productivity of the economy. So I think that's one. And the final part, which is the third factor, so there was demographics we discussed, there was governance we discussed, and I want to finish the video within 45 minutes so that we can discuss the numbers in other videos also. And the third part is technology. Now, why is technology so important? Like, for example, technology like Skype. So there are two parts of technology, let's say data and energy. So let's look at data first. Before COVID also, technology like Skype was already there, right? I've worked in many companies. We internally had video software, but nobody ever used it actually, even though the technology is already there, because there was a certain stigma to it, that how can you actually work? How can you work with somebody on video? But COVID has forced all of us to work from home and do this video chat. I think what that has happened is because Indian cities were so poorly deprived of infrastructure, and India in general has such a low cost base compared to, say, Boston, New York, San Francisco, or London, that people across those cities and within the richer and more densely populated cities of India are thinking that if I have to talk to somebody on Zoom or Skype, then how does it matter where he or she is sitting, at least to some extent? And in that case, somebody in Bangalore can work with somebody in Boston, and somebody in Banaras can work with somebody in Bangalore, or somebody in Banaras can work directly with somebody in Boston. And the cost of living is so dramatically different that the labor arbitrage becomes much more real. So, which is, I think, one of the reasons why, I mean, along with COVID requires digitalization. I think that's one of the reasons why Indian IT and IT enabled exports and these what are known as in-house captive centers, their exports are absolutely booming in the last 1.5 years, because the distance no longer matters when it comes to services. Ironically, it matters more and more when it comes to goods, because then there are real goods which need real containers, and we are having shortfall of containers and computer chips and so on and so forth. So I think it has become much easier to have a flat world, because where you live, I'm not saying it's not important, it's much less important. And even if you go to hybrid work, you can use co-working spaces to have your tech company effectively all over India, all over the world. You don't necessarily need to open new offices everywhere. So I think that is a big part of the reason to be bullish on India, because that human capital is already coming up. It's educated, it's literate, it's technology native, it increasingly speaking more and more English. And there is a big demand for business analysts, technology analysts, and so on and so forth. So that is in a way the big reason why, nobody 20, 30 years ago thought that something like Infosys and TCS will be a huge part of Indian middle class, but that's what it happened. So a lot of things will be exported from Indian software companies and GCCs, which right now we cannot even imagine. And technologies like augmented reality, virtual reality will make it almost as if we are having a conversation across the table. I think so. Let's put that aside. That's a big reason to be bullish. The other reason is, what are some of India's most expensive imports? Energy, oil. And what we are seeing right now in energy, with renewable energy prices falling more and more, solar, wind, and the price of batteries falling. And what does that mean? The reason why batteries is important is because solar is extremely cheap already in India. But if the sun is not shining because it's cloudy or it's night, or wind is cheap, but right now it's not windy, and I can't switch my AC off in a hotel or a hospital because right now it's not windy or sunny. Therefore, you need technology to be able to save energy from that wind and solar for those gaps. And therefore, the battery price is also falling. And battery plus solar plus wind plus more controversial nuclear and other technologies is effectively producing more and more and cheaper electricity. Part of the fuel imports will go down because of hybrid and electric cars. First, it will happen with two-wheelers. After that, it will happen with four-wheelers. In two-wheelers, already the break-even price for an Ola Electric or an Ather Energy two-wheeler, I think, if you look at the total cost of ownership, it is already significantly lower than a conventional Honda or Bajaj. I'm ready to be corrected. If it's not already there, it'll be there very soon. Similarly, maybe another couple of years it will happen for four-wheelers. We'll have a network of charging points all over the country. So a big part of India's imports will become non-existent, or more realistically cheaper, because we'll still import oil for re-exporting it or for building plastics and so on and so forth. And our exports are increasing because of the data side, because we're exporting services. So what that means is the rupee will start to strengthen. And this is the point I want to end on by saying, जब मैं बोलता हूँ कि 5 trillion हो जाएगा 2025 financial year तक, या 12 trillion हो जाएगा by 2031, or we could be the largest economy in the world by 2047, somebody goes and does a simple compounded ACAGR analysis, does itna compounding hona padega. It's not possible, and Harsh, you are obviously selling a fake dream, but they forget to factor in the appreciation of rupee. And so, without going into a macroeconomic lesson right now, let me just say that, if there is no real appreciation of the rupee should roughly change every year by the difference of inflation. I think that's easy to understand, right? I mean, if our inflation is 4%, the American inflation is 2% on average, then on average every year our rupee should depreciate by 2%, right? That's called nominal depreciation. But on top of that nominal depreciation, and that's roughly what has been happening over the last 5-10 years, but on top of the nominal depreciation, there is something called real appreciation, because your economy is becoming more productive, your terms of trade are becoming more productive, and that appreciation could be as high as 4 or 5 percentage points per year for 5-10 years, especially when the dollar is in a weak cycle. which is something people forget. And the way to understand is this: let's say 3 to 4 times is the difference of cost of living between America and India, right? Um, so let's say an iPhone costs the same in both places, take out a few taxes and all that. But services are dramatically cheaper in India. For example, a haircut in India is very, very cheap compared to a haircut in New York or Boston. Because wherever, instead of technology, you are having human labor cost, then in a richer country, because they're already rich, they have other options to work elsewhere. A haircut in dollar terms might cost you $30-40 in New York. It might not even cost you 30-40 rupees in many parts of many Indian cities. It might cost you slightly more if you go to a more fancy place, obviously, but even then, nowhere close to $40-50. So there is a way to understand it. When economies roughly converge in per capita wealth, their cost of living also converges, and that convergence is known as real appreciation. But it doesn't happen in a straight line; it happens in a cyclical form, right? As the economy grows richer, it happens in a cyclical form. The cyclical form is like a dollar cycle, and like 2002 to 2011 was a weak dollar cycle. 2011 to 2020, another 9 years roughly, was a strong dollar cycle. And if you go back to history, 1970s, and see forward, we are likely to see a weak dollar cycle. I mean, nothing is predestined, but it seems like the Americans have printed a lot. There'll be a lot more exports from rest of the world to America. And it seems like we're in a weak dollar cycle. But irrespective of that particular cyclical element, the long-term story of the rupee strengthening is very important. And if you want to do a real trillion-dollar analysis of where the Indian economy will be, or if you want to compare it to America or China, by the way, this real appreciation has already happened in the case of China, in the yuan or the RMB to a large extent. That is one of the reasons why the Chinese basically went from 1 or 2 trillion to 15-16 trillion dollars in such a relative short period of time. Because it was not just their inflation and their growth, it was also their currency relatively strengthening against the US dollar. So if you actually start putting those things together and then you do the math, then a different picture emerges, which of course people can still discuss, disagree, and debate. And we'll try to do more of that, more empirical numbers in future episodes, either as a monologue or in discussion with somebody. Because I have two mottos. If you look at the about section of the channel on YouTube, that pessimism requires as much humility as optimism. Number one, what I mean by that is, a lot of very smart, or people who want to sound smart, end up sounding pessimists because they're really afraid of actually being wrong on the downside. So they kind of miss the upside risk, and it's just safe to sound like sab kharab ho jayega, sab barbaad ho jayega. And the second point which I maintain is, while yes, you need as much humility to be pessimistic as you need to be optimistic, being empirically realistic is more important than being both pessimist and optimist. So ultimately, it comes down to numbers. Maybe I'll convert this entire talk into a book. I've already given this various versions of this talk at various fora. I've also used it in my professional work, of course, as a full-time investor. And I'm happy to look at all your comments, take all your questions on StreamYard, on YouTube, on Twitter, and I'll accordingly try to design future videos. So thank you so much for listening, joining this broadcast. It feels a bit strange to ask people to subscribe, but please subscribe. And that's it. So I think long India. I hope to chat to you, all of you, very soon. Thank you.